Good morning, everyone, and thank you for joining us for today's professional education event entitled Starting Your Own Business, Learn Best Practices and Tax Saving Strategies. This 1-hour session is being hosted by Counselor Buchanan and Mitchell, and our presenters today are Judy Barnhard and Jane Ochsman Rowny. Judy is a partner at CBM and a director of professional services, wealth management, and financial planning services. She is also a chief compliance officer and co-founder of MBI, the firm's wealth management subsidiary. In her role as a certified financial planner and a CPA, Judy consults on income tax preparation and planning for individuals, small businesses, estates, and trusts. She also provides advice on cash flow and budgeting, retirement planning, and risk management. She's a frequent presenter for CBM on tax and financial planning related topics. Jane is a partner at CBM who specializes in delivering creative solutions to meet clients' financial challenges. Her nearly 25 years of experience includes individual income tax planning, financial planning, and investment advisory services. She brings strategic decision-making to each engagement to maximize income tax benefits. In addition to being a certified financial planner and CPA, Jane is a director of CBM's divorce litigation services with significant experience in divorce financial planning and litigation, expert witness testimonial, settlements, collaborative divorce, and mediation. And hold on for one moment. I want to mute someone to avoid the distraction here, so please excuse me for a moment. All right, so anyway, thank you for joining us this morning. We are offering CPE. I will be launching 4 polls during the next hour. Please reply to at least 3 of the polls if you are interested in CPE, and if you're not, that's perfectly fine. The polls will appear in the main meeting screen or in the chat box. So I will launch a test poll now so you can see what it looks like. It should be on your screen now, or again, check the chat box. Again, I will launch 4 of these polls over the next hour. You only need to respond to 3. Certificates for CPE will be sent out to eligible attendees within 2 weeks. And any questions that you submitted during registration have been sent to our presenters, and they'll be incorporated into the presentation. But you're also encouraged to use the chat box if anything else comes to mind over the next hour. This session is being recorded, and to wrap up within the next day or 2, we'll also be sending out an email with the presentation slides, a link to the recording, and the opportunity for you to send in any follow-up questions for Jane and Judy. So with that, I'm going to turn it over to our presenters, and thanks once more.
Thank you, Joe. This is Judy, and I'm happy to be your first presenter today. Just a couple housekeeping items. There is a chat box feature in Teams, and if you have questions, please feel free to type them in. We will be taking questions at the end, but that way, if you get it typed in there, we'll be looking over it and be sure to try to answer your question before the 1 hour is up. Okay, so with that, we'll get started. The learning objectives today with regard to starting your own business is, of course, how do you get started? We're going to talk compliance items. We're going to talk about entity selection and taxation, setting up your books and records, everybody's favorite thing to do, budgeting, tax planning, deductions, risk management, and choices for self-employment retirement plans. And here you see our buddy there. He's got his Dos Equis beer in front of him. And, everybody thinks, wow, it's really great. You're starting your own business. You're just going to be, hugely successful, which we hope that everybody is. But in reality, you're going to be wearing lots of hats. You're going to be the accountant, the salesman, the website designer, the recruiter, and still answering your emails at 11 p.m. maybe. According to the U.S. Census Bureau, there were 5.4 million new businesses in 2021, surpassing the record in 2020 of 4.4 million. And of course, we attribute that to the Great Resignation, or sometimes also referred to as the Great Reassessment. Partly what's driving that is inflation at 8.3%. and the S&P 500, stock market being down close to 14%, many individuals who were otherwise thinking of retiring or even maybe retiring but coming back in, thinking about hanging their shingles up and starting business so they don't have to go into their savings during a down market and high inflationary period. Okay, so getting started. The very first thing that I always talk to clients about is preparing a business plan. And it's probably sounds like what you learned in college, but it's true. You definitely want to do that. What is your company description? What's the product that you're going to be offering or service? Have you performed a market analysis and do you understand who your competitors are? Will you need fellow owners or investors? What kind of marketing are you going to be doing? Will you have employees? Have you prepared a financial projection so that you can understand what your kind of break-even point is? Many businesses are not successful in their first year and even in the first 2 years. So you want to consider, do you have the resources available either personally or through investors or maybe Small Business Administration loan, to get you through the first couple of years of getting your business started. Assemble your professional advisory team. So absolutely, your CPA, your attorney, insurance broker, and banker are all going to be part of your team to basically launch a successful business. In terms of choosing a best legal structure, we're going to be covering that in depth in the next slide, but just think about, limiting your liability. We're going to be talking about that. The business structure should accommodate whether or not you're planning on having investors, whether or not they are, full active partners or whether or not they might be limited partners, how to save money on taxes, saving money on startup expenses, and then whether or not you have an exit strategy. Now, I know when you're first starting a business, you might not be thinking about exit, but you should in terms of the business entity structure that you choose. Compare costs and effort. As we start to talk to you about the different entities, certain entities are more expensive to form and to maintain year after year compared to some of the less expensive entities. However, you have to consider the additional compliance costs, the cost of filing separate corporate tax returns or partnership returns, and also separate payroll returns. So, there's a cost benefit associated, and you have to think about how much income you're really going to be making before deciding on your final entity choice. Establishing your business name, very important. You want to register that to protect it. I have a client in Virginia that operates under a name, and I know that there is the same name that's a national entity. So, think of a name that you want to research it, you want to register it. Will you have a trademark, and does that need to be registered? And what about a domain name for your websites? You might want to reserve several domain names, just so if you are wildly successful, that nobody else then tries to basically get a domain name that is close to the one that you chose. Obtaining a federal identification number. Pretty easy now. You can register online at irs.gov. The form itself is the SS4, but actually the IRS website makes it very easy to obtain a federal identification number, but you do need to know the entity type that you're going to have before you do so. And it is going to ask you what year end your accounting period is going to have. You'll want to register your business in your domicile state and obtain a state ID number and determine if a business license is required. Also consider whether or not you might have sales tax, you might have personal property tax, and in the state of Virginia, there is what's called a business, professional, and occupancy tax, otherwise known as a BPOL tax that's taxed on gross receipts. So be sure to make, that you check out your state requirements and the tax filings that you might have to have. And lastly, don't forget your federal and state filing requirements. Where is your business located? Are you going to have brick and mortar? Are you going to be virtual? Where are your employees located? Where is your business personal property located? The nexus laws are complicated. Each state wants to try to tax you. So you need to understand what your obligations are there, and what states you're actually going to be filing in. Okay, now this slide I know is probably a little bit daunting. It's the meat of it. We're going to walk you through. These are 5 entity types that are popular. There are other legal structures, so just want to point that out, that there are other structures, but these are the ones that we wanted to cover with you today. Sole proprietorship, very easy. You hang out your shingle, here I am, Judith Barnhard, ready to offer you services. Unfortunately, that means that the legal liability to me is unlimited. And if lawsuits are assessed against my business, my personal assets can be at risk. Now, that's not to say that a sole proprietorship isn't right for certain people. It might be. It depends on what liability you think your risk factors are. Very simple. You file a Schedule C. It's part of your regular 1040 individual income tax return. That you're taxed, obviously, on the net business income, and you are subject to self-employment tax on those earnings. Low costs of administration and legal. And major advantages is its independence, flexibility, low cost of formation, and just fast. I mean, you could do this right away. So many small businesses do set up as a sole proprietorship, but then what's limiting them or keeping them from choosing that is ultimately the legal liability. So along came the limited liability company. If you have a limited liability company and you have one member, which is called a sole member LLC, then you still file a Schedule C as part of your 1040. And essentially, it's as if you were a sole proprietor, but you under the protection of that limited liability company. So the liability is generally limited to the invested capital of the business. The tax filing required, you'll see, depends, because a limited liability company, if it's one person, can be filed on a Schedule C. If it's 2 or more people, it could be a partnership. It could also choose to be taxed as an S corporation. So the tax filing required depends on what you decide to do with that limited liability company once it's formed. The taxation of income is directly passed through to the owner and is subject to income and possible self-employment tax. The cost here is medium because you will end up having to adopt articles of organization. In the state of Maryland, there's a $300 annual fee that you pay, annual report fee, regardless of whether or not you make money or not, to keep your business in good standing. So, you know, there's some additional costs associated with it. However, clearly the advantages are the limited liability, and as we mentioned, the tax treatment will depend on what election you make, either to be taxed as an S corporation or a partnership, or whether or not you choose to be a single member LLC. In terms of partnership, there's general partnerships, which I didn't list here, but referring here to the limited partnerships. Unlimited liability for the general partner, but limited for limited partners. So this is going to be good when you may want to have investors that are basically silent investors, and they could be limited partners in this example. It would file a Form 1065, so it's a separate tax return that's filed. It's a partnership return, and it distributes K-1s to the individual partners. And the partners are taxed based on an agreed upon formula that's outlined in the partnership agreement. So it's flexibility. It's very flexible in terms of design as to how profits should be shared and distributed. But it does have the additional costs associated, as I mentioned, with preparing a partnership agreement. Now, C corporation is what most people are familiar with. It's it's what anytime you purchase stock in the stock market, these are going to be C corporations. The legal liability is limited to the invested capital, and it files a separate corporate tax return called a Form 1120. However, the corporation pays its own tax as opposed to the individuals. And there's a double taxation in the sense that if it distributes dividends, then the profits are taxed at the shareholder level as well. Its costs, along with the S corporation costs, are going to be higher because you're going to have to file articles of incorporation. You're going to have bylaws. You're going to have annual meetings and minute books to keep up. So the bar is a little bit higher when you're working with a C corp and S corp in terms of the actual administrative and legal costs associated with it. On a C corporation, limited liability, as we mentioned, for shareholders, officers, directors. One thing I also wanted to add here, there's certain C corporations where there's tax-free fringe benefits are better in a C corp. And so sometimes we have, even though, maybe a one-person shop will operate as a C corporation because their situation may be that they have higher tax-free fringe benefits that pass through it, and that works out for them. S corporation is a separate legal entity. It does have to have the articles of incorporation and bylaws, and the legal liability is limited to invested capital. However, in an S corporation, the net income is distributed similar to a partnership, it's distributed to the S corp owners. It's going to be distributed based on the ownership share that the shareholders have. Individuals that are working within the S corporation must be compensated through payroll. So where one advantage is that is if you pay reasonable compensation, that's the kind of the term that the IRS uses, then you might be able to save on payroll taxes, which we'll be talking about in a minute. But you do want to make sure that you're paying at least reasonable compensation, and the IRS does look and audit S corporation returns that are distributing profits without payroll returns associated with it. It's less flexible in allocating income than a partnership. And in an S corporation, certain fringe benefits to more than 2% owners are less favorable than in a C corporation. So a lot said. That's a lot of slides, a lot to take in. I will say I'm not an attorney. First to say that, not an attorney. I suggest you consult your attorney, consult your CPA. This is a high-level review, but the actual entity choice that is right for you depends on your individual facts and circumstances.
Okay, excuse me a moment, Judy. I'm just going to launch the first poll here. So for anyone who's interested in CPE, I'll leave the poll up on the screen or in the chat box for about 30 seconds. Please click and submit your response. Thank you.
Okay. So how are organizations taxed? C corporations, I'll back up just for a second. The Tax Cuts and Jobs Act that was passed in the end of 2017 changed the taxation of C corporations significantly, and it implemented a flat tax of 21%. There's no graduation. You just fall off the cliff, and it's 21%. As opposed to what you'll see is other business structures, sole proprietorships, LLCs, partnerships, S corporations, where the income is passed through to the owners. The income is taxed at the individual's personal income tax rates, which right now range from anywhere from 10% to 37% and are graduated. And it obviously will depend whether or not the person is married, filing joint, or separate, or single, or had a household. Now, corporations, if they end up paying a dividend, the dividends do receive favorable taxation, right? They're treated like other investment dividends if it's qualified, and the rate of taxation could be 0 to a high of 23.8%. So you've got lots of different tax rates depending on the entity that you choose. Business owners are also subject to tax in states that they do business that we mentioned before. And in terms of the corporate tax rate, there are 44 states now that do levy a corporate tax rate ranging from North Carolina low of 2.5%. And North Carolina, by the way, is a very popular place for retirees or businesses to start moving to because of their favorable tax laws. But this is an example of that. Or New Jersey, 11.5%, ouch, on the corporate state rate. There is also a 20% deduction for pass-through income. It's called the qualified business income deduction, subject to limits. That does help to basically, I'll say, shelter the business, the tax that the other alternative, let me get this right. It helps for the corporations that are paying a lower rate versus individuals who are paying higher rate. The pass-through income on the qualified business income helps to reduce that difference. Big caution here, attorneys, accountants, and other licensed professionals are restricted to what entities they might be able to operate in, and the restrictions vary by state. So another reason to consult your attorney if you fall under this category, because you want to make sure that you set up the right corporation if you plan on being providing specialized services. Okay, starting your own business in terms of taxation, FICA taxes. Here, as you know, when you work for an employer, the employee pays 1/2 and the employer pays 1/2 of the FICA and Medicare taxes. So what does that mean? Specifically, the FICA wage base is $147,000 in 2022. So 6.2% Social Security tax on the first $147,000 of wages. Plus, then there's the Medicare tax is just 1.45% on the first $200,000 of wages. And then if you're over the 200,000, there's an additional 0.9% tax. So a total of 2.35% on wages in excess of 200,000. Now, when you're self-employed and you are operating as one of the pass-through entities or sole proprietor, you're going to be paying both. So it's a 15.3% tax in addition to income tax, in addition to state tax, in addition to sales tax, property tax, and people tax. So if you've heard the word tax, there's a lot of tax. And one of the worst problems for new businesses is not understanding that and not putting aside money to pay their taxes. And then they go and have their taxes prepared. And like, blah, blah, blah. What do you mean I owe all this tax? So definitely keep in mind that when you're self-employed and you have the pass-through, your obligation is to pay both the employer and employee portion of that tax. So where are we all on this? Kind of a summary rule of thumb, if you will. Most businesses can basically operate as an LLC in terms of it's easy, it's inexpensive, it provides that limited protection. It's best going to be for businesses that maybe have 75,000 or so of profits or less. If you have more and you have 75,000, maybe up to 250,000 or so of profits, you might consider the S corporation, so that you maybe your reasonable compensation is 75 and you end up passing out the rest of the profits and escaping that 15.3 self-employment tax. So that's another popular form. Depends on the sweet spot as to what your actual compensation will be. But keep in mind, if you choose that, you've got to file a separate S Corp return and separate payroll returns, and that may offset the savings that you're otherwise paying on the self-employment. And a C corporation is going to be very attractive if you're planning on making lots of money and maybe you want to reinvest that money in the future growth of the company and or obviously attracting certain investors. Okay, so now you've decided on your entity and you filed for your federal identification number and your state numbers and you're ready to start business. Well, you've got to set up your books, your accounting system. And you're going to want to decide what accounting method you're going to choose. Typically, it's cash, accrual, or modified cash. Cash is pretty simple. It means that you're going to report as income when cash is received in the door and as expenses when cash is dispersed. On the accrual method accounting, you're reporting income when it's earned, not necessarily when you receive that cash, but you get to deduct expenses when they're incurred, not necessarily when you pay them. So it really depends on the type of entity you are. I work with a lot of government contractors where they may need to set up their books for accrual accounting for government contracting purposes, but then they do accrual to cash conversions, or we do as CPAs, and file their tax return on the cash basis. So that's something to definitely talk to with your CPA about. And your accounting system should accommodate the ability to produce a balance sheet and a profit and loss statement. Your chart of accounts will follow that. You'll have assets, liabilities, equity, obviously your revenue accounts and your expense accounts. And there's automated accounting systems out there, most popular being QuickBooks, but there's also Quicken, and there's a lot of very sophisticated accounting packages, for example, for government contractors to use. How will you get paid? That's very important. That's something should be back in your business plan. How are you going to invoice them? And are you going to accept credit cards? Well, be ready for a shock, because the credit cards are expensive, and it could knock off 3 or 4% right there of your income just to pay the credit card fees. Are you going to accept PayPal? What about cryptocurrency? So think about how it is you're actually going to get paid. Determine how to record your transactions. That's really going to be in consultation with your accountants. Open up a business bank account, and we do recommend that you have an employer identification number. In some entities, you must have it. Most entities, you must have it. But as sole proprietorship, you don't have to have it, but we still recommend that you do. So you're not giving out your Social Security number, but instead you are using an employer identification number. And how are you going to keep a record of your expenses? And specifically here, I'm referring to substantiation of expenses, because the IRS, if they were to audit you, they're going to say, well, show me the receipt, show me the proof that you made that disbursement and what it was for. So there are electronic filing systems available within bill.com. There's a popular feature out there for called Expensify, but there are automated systems where you can basically scan and keep electronically copies of your substantiation. And of course, there's the old-fashioned, paper files that maybe you file them by vendor alphabetical order. But think about that. Think about it early, because you want to make sure that you have that in place. And then lastly, make a schedule and set reminders in terms of various due dates for when tax returns are due, when estimated tax payments are due, sales tax returns are due, all of the different compliance dates. Put that on your calendar and set reminders so you don't lose that, because you want to minimize, obviously, underpayment penalties and interest associated with that. With that, I'm going to turn it over to Jane.
Thank you, Judy. Hello, everybody. Well, now that you know, you've started your business plan, you've chosen your entity selection, you've set up your books and records. Now it's time to go out and make some money. And an important aspect in running a successful business is budgeting. So I'm going to talk to you a minute about budgeting. There are, first of all, things to consider as on the income side. How often do you anticipate receiving income? Is your income going to be lumpy, where you get payments occasionally in varying amounts? Or do you have a contract where you would be getting a somewhat regular and even payment on a monthly basis? It's very important to understand this, because it's important to match up the expenses that you will have coming due with the money that's coming in, so you have the money available to pay those expenses when those expenses are due. I recommend that you map out on a monthly basis, month by month, for at least 12 to 24 months, the income by month that you expect to receive. Once you set up a spreadsheet like this, you can also use the same spreadsheet to map out your expenses month by month, all the expenses that you expect to have. Expenses, just as income, can vary. Some can be lumpy, that you might have them once or a few times a year, such as maybe an insurance bill. And other expenses might be regular and recurring every month, such as a utility or a cell phone bill, a little bit more predictable. Either way, you're going to need to make sure you've budgeted sufficiently so you have the resources to pay those expenses. In addition to your regular operating expenses, it would be also important, as Judy mentioned earlier, to set aside, when you have money coming in, set aside a portion of that money to pay the anticipated income taxes and FICA taxes that you will have due on that income. In addition, you want to pay yourself. So how much should you charge so that you are paying yourself a sufficient amount for the services you're performing or the goods you're providing? So you can, once you've determined your costs and your taxes and how much you want to earn yourself as compensation for the work you're performing, you can add all these amounts together, and that sum will give you a sense of what you need to charge and what you need to bill your clients, your customers, so that you can earn a decent living on the work you're performing. And then ask yourself, is this a reasonable charge in your industry for the work that you're performing? Your costs will generally fall in two general categories. One is overhead costs, and those are the costs of running your business. You're going to have those same costs regardless of if you have one customer or 50 customers. Those costs might be legal fees, they might be tax preparation fees, or your insurances. The other set of costs, I would say the other bucket, are the job costs, costs related to a particular job. So if you didn't have that job, you wouldn't have that cost, but because you have that job, you're going to incur that cost. So it's important to match up those job costs with the job that is creating them. And how do you pay yourself? I get asked this question quite a bit. Well, if you're a sole proprietor and you've set up a business account, you simply move money from your business account to your personal account. You're not going to be taxed twice on that income. You've earned it once, you report the income, then you make a transfer to your personal account. If you're a sub-S corporation or a C corporation, you've likely set up a payroll system and put yourself on the payroll. So you would be paying yourself through the payroll. Then there are costs that you are likely going to have in the first year of running your business. First bucket of those costs would be organizational costs. And these are costs that are related to forming your business. Legal fees, filing fees, accounting fees to set them up are good examples of those kinds of costs. Another bucket or type of cost that you might have in starting your business are called startup costs. And these are costs that you have and you're out of pocket for, but these happen before you're actually operating your business. They might include costs such as advertising or travel. So you're allowed per the IRS to deduct up to $5,000 of organization costs or startup costs, subject to some phase-out rules, in the first year you're in business. The balance of those costs need to be capitalized and amortized over 15 years. The third bucket of costs that you would have are operating costs. And these are the ordinary and necessary costs of running your business. And those include the overhead and the job costs that I spoke about previously. So in addition to the budgeting, do you have enough money to get started in your business? Are you going to need to buy equipment? Are you going to have to put 1 month's advance rent on a lease if you're leasing an office? Are you going to need money to float yourself for the first few months before you might receive any payments on the services or goods that you're providing? So if you think that you may need financing, I recommend you apply for it earlier rather than later, so the financing is in place when you actually need the money. Some common options for the financing include small business administration loans, as well as maybe a home equity loan if you own a home. Regarding account management, Judy spoke about the importance of setting up your books and records. It's also very important to segregate your business financial life from your personal financial life. So this means setting up a business operating account. This is the account that you'll use regularly. The income that you receive for your goods or services will be deposited into this account. Any expenses you pay will be paid out of this account. Transfers to yourself to your personal account when you need money for your own bills, personal bills, will simply be transferred from your business to your personal account. You may also want to set up some supplementary accounts just to keep your money straight. And one of the common ones is a separate account for tax payments, that you set up a bank account and monthly or as you receive a check or a payment on income, you take a portion of that and you transfer it to this separate account that you set aside. So when it's time to make your quarterly estimated tax payments or taxes due at the end of the year, you've been saving the money for that. You may also want to set up a separate emergency reserve. Would if a payment, someone you've invoiced, that payment hasn't come in when you expected and you have payments due on expenses. So to slowly build your emergency reserve in a separate account so you have money set aside for those unforeseen expenses or those unforeseen circumstances. I also recommend that you maintain a separate business credit card and not mix your personal and business credit card charges, and then pay that credit card bill from your business operating account.
Excuse me a moment, Jane. I'm going to launch the second poll for CPE purposes. I'll leave the poll up on the screen and in the chat box for about 30 seconds. So please submit if you're interested in CPE. Thanks.
Thank you, Joe. So another important aspect of running a successful business is your tax planning. Everybody wants to know, how can I pay less in taxes? And what do I need to do to be compliant? Well, first of all, you need to report all the income that you've collected and received. And you need to record your expenses properly and keep adequate receipts to substantiate those expenses you'll want to claim on your tax return. At the end of the tax year, the people that have paid you are likely going to issue you a 1099. So when you get that 1099, it's very important that you check that against your own records to make sure that that 1099 is correct, because mistakes do happen. And sometimes those vendors or those customers will include expense reimbursements in those 1099 numbers. So if the expense reimbursement is included because you have charged the customer for those out-of-pocket expenses, then you want to make sure you're also deducting that expense so it's a net zero to you and you're not reporting more income than you actually earned. If you are a vendor yourself or you have subcontractors and you're paying other individuals, you will need to give them a 1099 at the end of the year. And the general rule is that you're required to issue a 1099 to each person to whom you've paid at least $600 in the course of your trade or business. So you will need to have their proper tax ID number. And the way to get that is when you begin that relationship, give them a 1099 so you get the proper information that you need to file the 1099 for them at the end of the year. If you're going to be working out of your home, you may be eligible for a home office deduction. So it will be important to maintain records for the expenses of operating your home office that you're allowed to claim, such as a portion of your utilities, a portion of your rent if you're a renter, or a portion of your mortgage interest and real estate taxes if you're a homeowner, as well as cleaning and landscaping and repair costs. If you're using your car for business purposes, it's important to maintain a record of the business mileage that you've driven. Would include things like the date you drove, who you saw, where you went, and the amount of mileage. And this is very important for IRS compliance purposes. We talked before about the importance of taxes, that as a self-employed person, you will likely pay quarterly estimated income taxes. If you are a sub-S corporation or a C corporation and you've set up payroll, you may be paying a portion of your taxes through federal and state payroll withholdings, but you may also need to make supplementary quarterly estimated payments. And we talked about the importance of keeping cash reserves for those payments when they come due. We get asked the question a lot, how long do I need to maintain my records? Well, the IRS recommends 3 to 7 years. So here's a slide that lists many of the common deductible expenses that you can claim as a business owner. I mentioned the startup and organizational costs before. If you sell a product and you have inventory, you're allowed to deduct the inventory that you've sold. You're allowed to deduct utilities and your insurance costs, rent for any business property or equipment or office space you have, the auto expenses, which I mentioned previously, office furniture and supplies, although some of the furniture may need to be capitalized and depreciated, depending upon the amount of the cost of that furniture. Web hosting, software subscriptions, advertising, marketing, travel expenses, interest on business loans, your taxes, your employee salaries and benefit programs, contracted labor, that's your subcontractors that you would be issuing 1099s to at the end of the year, the legal and professional fees for running your business, retirement contributions, which I'm going to talk more about in a minute, and your self-employed health insurance for you and your family. So next slide, please. Okay, so as far as risk management, insurance is very important to review as a business owner. Here's a list of some common insurances you may want to review. The first is general liability insurance. This would help protect your business from claims by others that you cause them bodily injury or property damage. It may not be applicable in certain businesses. Again, you would need to review the type of work you're performing and whether or not you might be subject to this type of risk. Professional liability insurance is generally required to be a prudent business owner. This will help cover claims related to mistakes that may happen in professional services that your business provides. If you're an employer, you may want to consider workman's compensation insurance if any of your employees were to receive a work-related injury or illness. They may want to file a claim against you, and this will protect you for that. For yourself, disability insurance may be one of the most important insurances that you can purchase, because what would happen if you became disabled and the income stream that you're relying on to pay your expenses dries up because you're not able to perform the work? So I encourage business owners to review your disability insurance policies or see if they meet your needs. Other insurances that are important to consider are life insurance and health insurance if you're not on another health insurance plan. So now this is the meaty slide on retirement plans. Retirement plans are twofold, very beneficial. One is they provide wonderful tax savings immediately. And secondly, they help plan for your retirement so that you can begin to put away money for your future retirement needs. I'm going to review some of the most common types of plans for someone starting a business. And the first is the SEP IRA. The SEP IRA is the Simplified Employee Pension. So this is designed for self-employed individuals and small business owners. It's very simple. It's easy to set up and operate, has low administrative costs, very flexible with annual contribution, and there's no refiling requirements required, but you cannot take loans from this SEP IRA. The employer only contributes to this plan, and the contribution is 25% of the total compensation, or basically net income, up to a maximum of $61,000 plus a catch-up if you're over age 50, so that you could contribute up to $67,500. And they're generally limited to roughly 20% of your self-employment income after the IRS required adjustments. Employees can't make a contribution to a SEP IRA. However, an employee can open their own IRA or contribute an IRA amount to their SEP IRA. So the deadline for establishing this plan is and this is another beauty of this particular plan, because the deadline to open the plan and fund it is the income tax filing deadline, including extensions. So say you've been in business for the first year, your 2021 tax return is on extension, you haven't filed it yet, and you said, wow, I made a lot more money last year than I realized. What can I do to reduce my taxes? I haven't yet set up a retirement plan. Well, this might be the plan for you, because you have until you file your return, including extensions, to open the plan and to fund it and to take the deduction in that past calendar year. So another form of retirement plan is the solo 401k. This is a little more sophisticated than the SEP IRA and can potentially allow someone to save more money or deduct more money for retirement. This is designed for a self-employed individual with no employees other than a spouse. And this is, some people sometimes get confused with them because you wear two hats. You contribute as both the employer and as the employee. And as the employer, your portion is similar to the SEP IRA. It's 25% of your total compensation. As the employee, you can contribute as you would a traditional 401k. You can contribute up to 100% of your compensation, which would be $20,500 plus a $6,500 catch-up if you're age 50 and over. So sometimes the combination of the employee and the employer contributions for a solo 401k can be higher than the 20% you're allowed as a SEP IRA, depending upon the amount of income you have. Now, a solo 401k must be set up, must be opened by the last day of the taxable year. So if it's 2022 and you hadn't set it up by the end of 2021, this plan could not be an option for you for your 2021 tax return. But regarding funding, this does not have to be funded until the due date of your return, including extensions. So moving on to a more sophisticated type of retirement plan is the traditional 401k. This can be any employer, but it's generally for larger companies, not generally for someone who's self-employed and is their own employee with no other employees. This requires, 401k requires more work to operate the plan. As far as the contributions go, they're similar to the solo 401k. The total of the employer-employee contributions are similar limits, as well as the employee contributions are similar limits. So the last retirement plan I'm going to talk about on the next slide, please, It's a
Excuse me,
simple
Jane, I just want to interject here. I'm going to launch the third poll, so please respond if you're interested in CPE. Thank you.
Thank you, Joe. So another form of retirement plan is the simple IRA, and this is geared for employers with 100 or fewer employees who earn at least $5,000 in a year. And an employer can choose to make a dollar for dollar match of up to 3% of the worker's pay, or they can just contribute a flat 2% of compensation, whether the employee contributes or not. This is not as commonly used, but it is another option for those who have their own business. Now, another option in retirement plans, which is actually a health savings account, but can be used for retirement. This is a wonderful tool. If you have a high deductible health insurance plan, that would be a plan in which your deductible is at least $1,400 for an individual or $2,800 for a family. You're allowed to open and fund a health savings account and take a deduction for the amount that you contributed to the health savings account. You must open this account by the income tax filing deadline. There's no extension on that. But say it's March and you've made too much money and you have a high deductible healthcare plan, you can decide to open an HSA for that prior year and fund it and take that deduction for the prior year. You don't need to use the money immediately. You could use it for qualified medical expenses, or you could invest that health savings account money and use it later on in life, such as in retirement, to fund your medical expenses in retirement, which is why we have it listed here with retirement plans. Okay, next slide, please. So I want to leave you with some resources that you can use to consult with besides your CPAs if you are looking for additional information on starting your own business or operating your business. The Small Business Administration has a wonderful website. The IRS also has terrific resources. In particular, they have a publication 334, which is a tax guide for your small business. In addition, I recommend that you consult your state resources. Maryland, DC, and Virginia all have wonderful websites for business owners in starting your own business. So now I'll turn it back to Judy for questions.
All right, you know what, let me just launch the last poll for CPE purposes. If you still need to play catch up and answer your third poll or respond, here's your last opportunity.
Thank you, Joe.
Thanks, Joe. So we had a couple questions that were submitted in advance that we wanted to address, and then we'll also, I think there's a couple in the chat. How early do you need to form your business entity when starting your small business? And the general advice there is you should register your business as early as possible. If for some reason you don't go through the whole entity selection process, you'll most likely be considered a sole proprietorship, which has the advantages and disadvantages that we discussed under the entity selection. Do I need an EIN to file taxes, or is the Social Security number enough? Well, we addressed that as well. We do recommend that you get a federal identification number so you don't have to be giving out your Social Security number, and it's easy to do. It's going to be required if you have the entities that we talked about, the S corporation, C corporation, LLC. But we do recommend you go through that process. And how soon does someone have to start paying taxes on a corporation that they have formed? Well, so the individual that submitted this question didn't specify what type of taxes. So we're assuming that these are corporate income taxes, and corporate returns are due on the 15th day of the 4th month after the selected year end. And estimated taxes are due on the 15th day of the 4th, 6th, 9th, and 12th months of the corporation's tax year. And you also want to obviously consider the state filing dates and when taxes are due to the state. Going into our chat box. Okay, are there any free services for setting up accounting books? I don't know that if there's any free ones. I mean, if you wanted to use Excel initially, you could, you have Microsoft Office or whatever, you could use Excel, but that's not going to be a, a traditional double entry accounting system that produces, financial statements for you. I know that QuickBooks Online has for a monthly fee, like a subscription service that you can use, and it's not terribly expensive. It depends obviously on the amount of transactions and whether or not you're running payroll through it, but you can expect that there'll be some fee associated with setting up your accounting system. And how does accepting ACH transfers from a client affect this? It doesn't. It would be reflected in your business bank account. You just need to identify. Sometimes it's hard to match up the transfers that come in and who's paying the bill, but after a while, I guess you get used to reading the bank's kind of cryptic notes in your bank statement and determine who's actually paying the bill. See, Jane, did you see any other questions?
Well, a common a point that I would like to make, this is not so much a question, is we didn't talk about the importance of engagement letters in contracts. So when you have a person you're doing work for, a customer or a client, it's important to have a written contract or a written engagement letter that outlines the services you're performing and the scope of those services and your fees, and have that signed, because this is a record of your relationship with that person. And I felt that that was very important to add to best practices for starting your own business.
Thank you for that. Let's see, I used this company called Wave for a little bit. It was good, but my bank wouldn't link up to it, so I switched to TurboTax. Okay, can an LLC be owned by a C corporation or vice versa? LLC be owned by a C corporation. Well, if an LLC was owned by a C corporation, it would be a subsidiary of the C corporation. And if an LLC, vice versa, owned a C corporation, it would be like an investment in that C corporation. So now you're talking about dual structure, mother-child, parent, subsidiary relationship. So with that, I just wanted to note that CBM, we do have regular webinars, and we appreciate you attending today. We hope that it was useful for you and you gained information. Jane and I are both available should you have questions. We do consult with small businesses and individuals going through these decisions. Our next webinar is actually going to be put on by our Barnhard Investments Wealth Management subsidiary, and Alex and Debbie will be giving a market update, which will be very interesting given where the market stands today and inflation, worries about the economy and possible recession. So that should be a great webinar to tune into on Tuesday, July 19th. And here is our contact information. You can call us at the main CBM number, and there's also our email addresses there. So we thank you for attending and hope you have a wonderful day.
Thank you.
Bye-bye now.